Who built the first banking system, and how did it change the world? Imagine waking up tomorrow and discovering that every bank in the world has vanished. No ATMs. No credit cards. No online transfers. No loans for homes or businesses. Your salary can't reach you. Your savings are locked away in numbers that suddenly mean nothing. The global economy freezes. Within hours, businesses stop. Within days, cities begin to panic. Now here's the shocking truth. The system that controls trillions of dollars today. The system that powers global trade, corporations, and entire governments. Started thousands of years ago with something incredibly simple. Clay tablets. And a promise. But who created the first banking system? Was it kings trying to control wealth? Merchants trying to protect their gold? Or priests guarding treasure inside ancient temples? The answer will take us back thousands of years, to the birth of civilization itself. Because the story of banking is really the story of how humans learned to trust strangers with their money. And that single idea changed the world forever. To understand how banking began, we need to go back to a time when money didn't even exist. Around 7,000 years ago, early civilizations were growing across fertile lands near rivers. People farmed wheat, barley, and raised animals. But there was a problem. Trade was incredibly difficult. If you were a farmer with grain and you needed tools, you had to find someone who had tools and also wanted grain. This was called the barter system. But barter had a huge flaw. What if the toolmaker didn't need grain? Trade stopped. Societies couldn't grow efficiently. So people invented something revolutionary. Money. At first, money wasn't coins or paper. It could be shells, salt, metal pieces, or barley. But even money created another problem. Safety. If you were a merchant traveling between cities, carrying large amounts of gold or silver was dangerous. Bandits, thieves, and corrupt rulers could take everything. People needed a safe place to store wealth. And this is where the first proto-banks appeared. Thousands of years ago in ancient Mesopotamia, modern-day Iraq, the earliest civilizations like the Sumerians built massive temples and palaces. These places weren't just religious centers. They were also financial centers. Farmers and merchants began depositing their valuables, grain, silver, and other goods, inside temple vaults. The priests and temple officials kept records of these deposits on clay tablets. If someone deposited grain, the temple recorded it. If they wanted to withdraw it later, they simply presented their tablet record. In other words, the first banks in human history were temples. These temples acted like financial institutions. They stored wealth. They recorded transactions. And most importantly, they issued loans. Yes, loans existed over 4,000 years ago. Farmers could borrow seeds or silver before planting season. After harvest, they repaid the loan with interest. Interest was already part of financial life thousands of years ago. Some records show interest rates of 20% on silver loans and even higher on grain loans. This system allowed trade, agriculture, and cities to grow faster than ever before. But it also created a dangerous new problem. Debt. People who couldn't repay loans could lose land, property, or even their freedom. Debt slavery existed in many early civilizations. Entire families could be forced into servitude if debts weren't paid. Even ancient kings had to intervene sometimes, canceling debts to prevent social collapse. But despite these risks, something powerful had already begun. The idea that wealth could be stored, recorded, and moved through institutions. That idea became the foundation of banking. As civilizations grew larger, trade expanded across regions and empires. Merchants traveled enormous distances, across deserts, seas, and mountain routes. Carrying gold or silver across these journeys was extremely risky. So traders began using a new financial tool: written payment orders. Instead of carrying heavy coins, merchants could deposit money in one city and receive a written note. That note could be redeemed for money in another city. In many ways, this was the ancestor of modern bank transfers. Civilizations across the ancient world developed their own financial systems. In ancient Greece, moneylenders began operating in marketplaces. These early bankers were called tripeditai, named after the tables where they conducted transactions. They exchanged currencies, accepted deposits, and issued loans. Greek bankers also developed another important idea: currency exchange. Different city-states had different coins. Bankers allowed merchants to convert money easily, making international trade far more efficient. But the real transformation came with the Roman Empire. Romans built one of the most advanced financial systems of the ancient world. Roman bankers, called argentarii, operated in major cities and marketplaces. They accepted deposits. They transferred money between accounts. They issued loans. They even processed payments between merchants without physical cash changing hands. Roman banking became surprisingly sophisticated. People could deposit money in Rome and transfer funds to another person without moving coins physically. Written orders and ledger records made it possible. But when the Roman Empire collapsed, much of this financial system collapsed with it. Europe entered a period historians often call the Dark Ages. Trade shrank. Cities declined. And complex financial institutions largely disappeared. But banking didn't vanish completely. In the Islamic world, finance and trade continued to grow. Merchants developed financial tools like the sack, an early form of check. A trader could deposit money in Baghdad and withdraw funds in another city hundreds of miles away using a written financial instrument. This allowed trade across the massive Islamic trading network stretching from Spain to India. Meanwhile, in Europe, something new was beginning to rise again. Cities. By the Middle Ages, trade routes reopened across Europe. Merchants from different regions gathered in major trading centers like Venice, Florence, and Genoa. These cities became powerful financial hubs. And here, modern banking truly began. In medieval Italy, merchant families started creating organized financial institutions. The word bank itself comes from the Italian word banca, meaning bench. Money changers conducted business sitting at benches in marketplaces. If a banker failed and couldn't repay debts, his bench would literally be broken. This is where the word bankruptcy comes from. But some Italian banking families became incredibly powerful. One of the most famous was the Medici family of Florence. In the 1400s, the Medici Bank became one of the most influential financial institutions in Europe. They introduced innovations that still shape banking today. They developed accounting methods. They expanded international banking branches. And they financed kings, popes, and massive trade networks. Their banking empire stretched across cities like Rome, Venice, Geneva, and London. For the first time, banking was no longer just about storing money. It became about financing entire economies. Bankers funded trade expeditions. They financed wars. They supported massive construction projects. Banking was becoming a powerful force shaping global events. But the next revolution in banking came from a surprising place: the Netherlands. In the early 1600s, the city of Amsterdam was becoming the center of global trade. Ships from Asia, Africa, and the Americas arrived carrying spices, silk, sugar, and precious metals. But there was a huge problem. Hundreds of different coins from different countries were circulating. Many were damaged or debased. Merchants struggled to trust the value of money. So in 1609, Amsterdam created something revolutionary: the Bank of Amsterdam. Unlike earlier banks, this institution offered standardized, trusted deposits. Merchants could deposit coins and receive bank money recorded in accounts. This bank money was stable and reliable. Traders across Europe trusted it. For decades, the Bank of Amsterdam became the financial heart of global trade. It showed the world something powerful. Banks could create stability in chaotic financial systems. Soon, other countries began creating their own banking institutions. In 1694, England established one of the most important banks in history, the Bank of England. But this bank wasn't just a place to store money. It was created for a specific reason: war. The English government needed massive funds to fight conflicts against France. Private investors agreed to lend money to the government. In return, they received interest and banking privileges. This moment changed banking forever. For the first time, a central bank helped finance a national government. And that idea spread around the world. Governments realized banks could help fund armies, build infrastructure, and stabilize economies. Over time, banking systems evolved rapidly. Banks began issuing paper money. They created credit systems. They financed industries during the Industrial Revolution. Factories, railroads, and global trade all depended on banking networks. But banking also created financial crises. Bank runs, market crashes, economic bubbles. Throughout history, financial systems have repeatedly collapsed and rebuilt. The Great Depression of the 1930s showed how fragile banking systems could be. Thousands of banks failed. Millions lost savings. This led governments to create regulations, deposit insurance, and stronger financial oversight. Today, the banking system is vastly more complex than anything imagined thousands of years ago. Digital banking moves trillions of dollars instantly. Global financial markets connect economies across continents. Central banks influence interest rates and national economies. But the core idea remains the same as it was thousands of years ago. Trust. Banking works because people trust institutions to protect their wealth. From clay tablets in ancient temples to digital transactions moving through global networks, banking has become one of the most powerful systems humanity ever created. It shaped trade. It funded empires. It built industries. And it connected the world. Yet the future of banking may be changing again. Cryptocurrencies, digital currencies, decentralized finance. Some believe traditional banks may eventually lose their dominance. Others argue that banks will simply evolve, just as they have for thousands of years. But one thing is certain. The invention of banking transformed civilization. Without it, global trade might never have expanded. Industrial revolutions might never have happened. Modern economies might never exist. All because thousands of years ago, someone decided to store wealth safely, record it carefully, and trust that it could be returned later. A simple idea. A powerful promise. And the beginning of the banking system that changed the world forever. If you look around today, every salary payment, every business loan, every international transaction, every investment, is part of that same system. A system that started with temples, merchants, and clay tablets, and grew into the financial engine of the modern world. And it all began with a simple question humanity had to answer thousands of years ago. Can we trust someone else to hold our money? Once people answered yes, the world was never the same again.